What is up, YouTube? My name is Adam Wilson and this is Broke Man Finance. Today we are talking about one of the most popular REITs out there, and they just had some big news come up. So I wanted to bring a quick update to talk about what that news actually was and what it meant to potential investors and current investors. The REIT I am talking about is none other than NRZ, or New Residential Investment. For the past few years, it has been one of the most popular REITs out there, mainly because of that meaty dividend that they were pushing out every quarter at 50 cents per share. For a lot of companies, this past week was a big week, very important to investors and shareholders, because it was the earnings of the second quarter, which everybody just had terrible expectations because of the Rona that came through and just obliterated businesses. NRZ was no different and posted their earnings for this tumultuous second quarter. One of the most exciting things I heard come out of NRZ was that they were increasing their dividend by 100%. When the Rona came through and started pummeling businesses across the country, REITs were no different. Businesses was forced to shut down, creating a huge increase in unemployment. And if you're unemployed and you have no income coming in, then you cannot pay your mortgage, you cannot pay your rent, thus affecting REITs. As soon as this happened, everybody freaked out and started pulling all their money out of the REITs, and it just caused the share prices to plummet. When these share prices started to fall, a lot of REITs and other companies across the country started to cut their dividends in order to save some capital to weather that storm. NRZ cut their dividend by 95%, but not 100%, and that dividend price per quarter went from 50 cents to 5 cents per share. Well, after the second quarter of earnings came in, NRZ decided to increase that dividend by 100% from 5 cents to 10 cents per quarter per share. Now, people may not think that's very much compared to years past, and it's not when you compare it like that. And if you do, we'll do the math here in a second. But if you look at the current share price, and it's fluctuating nowadays anywhere from $6.50 to $7.50, give or take, depending on the volatility that day, it still gives it a yield of over 6%. Compare that to a lot of other companies right now, and especially a lot of other REITs that are still not paying dividends. That's not that bad. Another really optimistic thing I've been reading is that NRZ is still considering more dividend increases throughout the year. The consensus is NRZ would not have hiked their dividend up by that much, and are already talking publicly about more dividend increases throughout the year, if they were not expecting the rest of the year to be profitable. A 100% dividend increase in this market is a good indicator that there are better days on the horizon. Now, for everyone that likes to math, which I really don't unless it's about money, I get and completely understand that the dividend is still 80% down from where it was, but it's better than 90. Please understand this. I am not saying that you should go out and pour your money into NRZ. For most people, they either hate it or they love it. They're either all in or never will be. There's not a lot of middle ground. What I am saying is this does make me optimistic on the potential that NRZ is moving in the right direction. I think it is completely feasible. In my opinion, I think that it's completely feasible that the share price could rise anywhere from $9 to $10 by the end of the year. With that kind of price point, I think it's certainly in the realm of possibilities that you could see continued dividend increases, and you could potentially see somewhere in the ballpark of 20 cents per share per quarter by the end of the year. But with the Rona always hanging and lingering around, flare-ups could certainly send that share price and these dividends in the complete opposite direction. But that's across the board for any company in the world right now. But in the meantime, that share price has already broken $8 a couple times, and not too long ago teetered around the $9 mark. Earnings per share were down almost 36% this year to 34 cents per share. But it did beat the estimates from different analysts saying that they would come in at 31 cents per share. And if you follow Zacks at all, they had them coming in at 27 cents per share, which completely obliterated that one. Revenue of $115,795,000. Dollars decreased by 38.42% from the same period from last year, which beat the estimate of $111,130,000 and beat Zach's estimates of 31.79%. If you wasn't expecting earnings to be down substantially in the second quarter, you're just fooling yourself. The Roni came in at the end of the first quarter, so the second quarter was completely annihilated by this thing. While its asset base has declined from $33 billion to $13 billion during the first 4 months of 2020, the sale proceeds that were generated through exiting $20 billion in investments were used to pay down the majority of New Residential's debt, which has lowered its overall leverage ratio from 3.5 to 1.5. If you read any of Seeking Alpha's articles on NRZ, you've probably read Jonathan Weber. This is what he has to say. When we take a look at estimates for 2022, where financial markets will hopefully have stabilized to pre-crisis levels and where the Roni is history, we see that analysts are forecasting EPS of $1.60. If New Residential were to pay out 60% of that in dividends, which would still be much less than their historic payout ratios, which typically it's around 90%, this would result in an annual dividend payment of 96 cents. 24 cents per quarter. Math. For someone who buys at the current price, this would equate to yield on cost of 14.3%. If analyst estimates are anywhere close to what New Residential will be earning in the future, the outlook from the current level is thus not bad at all. This is underlined by the fact that New Residential is trading at just 0.62 times book value right now, whereas the company has mostly been valued at 1 to 1.2 times book value in the past. Once things normalize, there could thus be meaningful upside to New Residential share price, on top of a solid chance for attractive future dividend payments. That is all for now for NRZ. I told you it would be a quick update, but I wanted to bring you some optimistic good news from the company. Whether you love them, whether you hate them, by all means, let me hear your opinions in the comment section below. And while you're at it, please smash that like button and subscribe. We would love to keep bringing you more and more videos. But that's all for now. Until next time, thank you for stopping by and stay safe.